Chewy is an interesting e-commerce company that focuses primarily on pet parents. It offers various products, including food and consumables for pets like medicine. It also sells toys and it's branching out into other services like insurance. It's also expanding into new markets in Canada. All that being said, how much is Chewy stock really worth? I'm going to attempt to answer that question in this video with a discounted cash flow valuation. Now, I'll share with you precisely where I'm getting all of the numbers I'm using to make this stock price estimate using the DCF valuation model. So you can see for yourself where I'm getting all of these numbers from and decide whether the estimates and adjustments I'm making are too optimistic or too pessimistic or right on point. Without further ado, let's take a look at the valuation.
Hey everyone, I want to take a moment to thank the sponsor of this video. Moomoo is a trading platform where you can buy and sell stocks and other investments. I use the platform for investing myself. If you join using the link in my description, you can get up to 15 free stocks.
All right, so one of the numbers I'm going to need is Chewy's market capitalization, which stands at 14.25 billion. I also need their cash and equivalents balance, which is 694 million. And the company has zero long-term debt. And the average diluted shares outstanding is 437.88 million. I also need the company's free cash flow estimates for the next 5 years, which I've pulled from a new source, ticker TIKR, and their free cash flow estimates for Chewy over the next 5 years, starting in 2025, is 502 million for 2025, 600 million for 2026, 610 million for 2027, 665 million for 2028, and 790 million for 2029. Of course, Chewy's fiscal year 2024 is actually completed already, and they generated 343 million in free cash flow in their fiscal year 2024. Companies are allowed to have fiscal years that are different from calendar years. That's why you see a company like Chewy, which has already completed its fiscal year 2024, even though we are still in calendar year 2024. I also need the beta for Chewy, which stands at 1.06. All right, so now that we have all of the estimates that we need to make the stock price target, we can go ahead and look at the discounted cash flow valuation model. Starting with the fiscal year 2024, where I highlighted they had completed already with cash flow of 343 million, rising to 503 million, and then 600 million in 2026 and 610 million in 2027, and culminating in 790 million in free cash flow in 2029. From that point forward, I'm forecasting their growth rate of free cash flows at 12%, which is the transition period of growth, where I have the company growing their free cash flows at 12% between 2023 and 2030 and 2034. And then starting 2035, I have the company settling down into their long-term growth of free cash flow at 5%. Now, because these cash flows are expected in the future, we need to discount them because money in the future is worth less to us than money today. The discount rate I'm using is 10.62%. I arrived at that weighted average cost of capital utilizing the capital asset pricing model, which gives me a 10.86% cost of equity, and I'm assigning a 8.5% cost of debt for Chewy. Since the company has zero debt and a market cap of 14.25 billion, I'm giving them a target capital structure of 90% equity and 10% debt. That gives me the weighted average cost of capital of 10.62%. So instead of forecasting each cash flow individually between now and infinity, what we can do is collect all of the free cash flows expected at the long-term growth rate starting in the year 2035 and collect them all in the year 2034. That's called the terminal value calculation. You get that by assuming or estimating the free cash flow 1 year ahead divided by the weighted average cost of capital minus the growth rate. And that gives me the value of $26 billion. Again, I need to get the present value of that number, which brings me here to 9.47 billion. Combining the cash flows gives me a value of operations of 14.26 billion. That's where we come over here and we add the cash balance to the value of operations. And since they have zero debt, there isn't anything to subtract there. The company has 437 million shares outstanding. So we take the value of equity and we divide by the number of shares outstanding to get an intrinsic value per share for Chewy stock at $34.16. Now, the current market price for Chewy is $34.05. So my intrinsic value per share for Chewy is very close to the current market price for Chewy stock. Now, this is just one way of calculating a value for a stock. There are other ways and there are other things to consider. So please do further due diligence before making a decision on Chewy stock. Of course, I have dozens of videos on Chewy stock on my channel. I encourage you to watch all of those before making a decision for Chewy as an investment. Of course, you can have access to these spreadsheets and my discounted cash flow valuation models and my buy, hold, and sell recommendations through a channel membership at the investor tier, which will give you access to all of these valuation models and stock recommendations that I've made in the past.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.